Hi, everyone. Felicia Pizzonia here, and welcome back to the Heart-Core Hustle. When you hustle from the heart, it's not hard. And when you do what spontaneously inspires you from within, you don't require outside motivation. So the Heart-Core Hustle is all about business, biceps, and spirituality. And this episode is brought to you by the Ultimate Publishing House, ultimatepublishinghouse.com. Which specializes in nonfiction books and personal development and anti-aging and so forth, celebrating 15 years of success. And today's guest, I'm super excited to welcome him. And before we do, I want to tell you a little bit about Efrem Hoffman. You know, during this current world situation, everybody's talking about investing in gold and silver and various digital currencies. Is Bitcoin going to go to 100,000, or is it going to go to zero? What's really cool about Ephraim is he used to chase hurricanes, and he's using that same, and I'll explain it in layman's terms, that same formula, math, calculus, what have you, to offer you a window of time, a prediction window to invest in these various assets. He's based out of Winnipeg, and he's super smart. So without further ado, let's welcome Efrem Hoffman to the show. Welcome, Efrem.
Thank you for the introduction, Felicia.
My pleasure, my pleasure. So Efrem, I'm super excited to ask you a bunch of questions regarding gold, silver, various digital currencies. Let's start with silver, perhaps. Is there enough silver on the planet Earth for people to invest in? And why is silver so hot right now? And should we invest in silver or gold? And I think that's enough for now. Let's start with those questions.
Okay. There is not enough silver in the world today, given the fact that so many of the mines have shut down or have reduced production over a period of years, while silver was doing terribly relative to almost every other market worldwide. So because of those issues, and also because of the fact that a lot of the technologies today that are actually advancing forward, like 5G technology, which requires semiconductors, they use lots of silver. Battery technology in electric vehicles, they require silver. Medical equipment suppliers require silver, and just in general, there is a tremendous demand in the institutional investment space, and also at the public level now, given that it had been known that silver was poor man's gold over a period. That's what they called it. But the reality is, I believe silver is going to be shining brighter than gold, partly because the ratio between the price of gold to silver has expanded tremendously over the years to well over 100. It's come down significantly as silver has launched up from 12 to 26. So in that sense, I do like silver, from the fact that there's a lot of demand and a lot of and very little supply, and in economics, lots of demand and low supply equals higher prices. Where with gold, there's more gold in the world above the ground, and also there are more people that have already gotten into gold, and a lot of production has already taken place in a lot of gold companies. There will be more because there will be a need, partly because of what this disaster has brought upon us with the COVID storm. This COVID storm has kind of opened our eyes up to the fact that the world is a fragile place. The monetary system is in dire straits right now, not just in the United States and Canada, but also worldwide, as central bankers around the world are actually in lowering rates in many cases to negative real rates. And when you get a situation like that, people start hoarding cash because they don't want to put their money into a bank and have to pay them money to store it there. It becomes very enticing to own gold and silver, even though gold and silver doesn't pay a dividend. It's still zero as opposed to negative with negative rates. And I believe because of that, that's also going to help cryptocurrencies such as Bitcoin, because those coins allow you, they're basically digital currencies where you don't have to hold cash. And the thing is, governments around the world are actually thinking about moving into central bank digital currencies. And part of the reason why they want to do that is because if they actually do that, they could get rid of cash. And if they get rid of cash, then they can avoid people from hoarding the cash and forcing them to spend more in the economy. Because if you don't hoard cash and you invest it and you put it into a bank, you're getting negative rates in parts of the world. Whereas if you actually spend it, you help the economy. So I think at the end of the day, people are forced into making choices that they wouldn't otherwise make. And I believe one of those choices are going to be silver in a big way, especially as we move into the month of August and again into October.
Excellent. Let's talk a little bit about, no one really likes the word forced. I don't want to be forced to spend my money on depreciables and consumables, but I understand what you're saying. I would like to understand, Ephraim, along with our subscribers here, tell us a little bit about digital currency. So Bitcoin, I'm a big fan of Bitcoin and Ethereum and a couple other ones, is Bitcoin's the gateway to get into other currencies. So let's say I'm a novice investor. How much should I start with, and which one would be the safest, for a lack of a better word, gold, silver, or digital currencies to start with?
I prefer silver. I believe silver is the way to go for the average investor.
Excellent.
Without a doubt, hands down.
And let's expand on that. So silver as in bullion, not the actual coins, actual bullion silver, or stocks, silver stocks?
Both. So I'm very bullish on silver over the intermediate and longer term, but also in the short term, outside of like what happens in a given day. But short term meaning the next 1 to 3 months, very bullish on silver, almost more bullish. Like one thing I do when I do my analysis, I try to not just look at the underlying metal, but I try to compare the underlying metal to all the factors around the world that could influence that metal in a positive and negative way. And when I compare silver relative to the stock indices, whether it's domestic or emerging markets, or I compare silver to, let's say, gold, or I compare silver to the yields on bonds, or even if I compare it to other commodities, it's showing on a ratio chart, basically meaning silver divided by whatever other thing we're looking at is actually going up faster than those other things. And not only going up faster, but we'll have more persistence, more clarity on the upside, and also if there is downside movement, they would be very short-lived, which would be good for the starter investor, because starter investors could withstand some volatility, but what they can't withstand is permanent volatility, meaning that prices are so volatile that you also get drawdowns that last for prolonged periods of time. If those drawdowns are somewhat normal, or even if they're exaggerated because of certain world events that nobody could contain, because they're going to be very short-lived, they won't feel the pain that they might in other asset classes. So I believe that being in silver, they're going to actually feel better, be in the comfort of investing while they're making money. And when it's time to get out of silver, I'll get onto your show again, and I'll let you guys know.
Very cool. Well, we'll see you in the fall again on the Hardcore Hustle. I've got a question from a good friend of mine in Monaco. He said, is it true that you should never keep your assets where you live? So let's say we're using an exchange like goldmoney.com or HAA. It's not an exchange, but you know what I mean, where you actually purchase the gold.
A hard asset alliance, yes. Yeah.
Hard asset alliance. Now, these two are based out of Canada. One of them is out of Jersey. So the question is it safe to keep your assets in your country, or should it be offshore?
Right. Well, it depends what your objective is. If your objective is to be an aggressive trader in a market where there's lots of liquidities, sometimes those liquidity providers aren't necessarily going to be in your own country. So in that case, as long as they're bonded and they're insured, and there's a record of safety in what they're doing, then I don't have a problem with that. But I do believe in diversification of assets, but also diversification of individual assets. So especially something where somebody, may put 15 or 20% of their total, net worth into silver and gold. That's aggressive. Most people in times like these, institutional investors may say a max of 5%, but I know that there's plenty of people out there that are going 15, 20, or there's some people going 50. But especially the higher you go, the more diversified you want to be in terms of how you invest in silver and gold. So I would say that it's better to have your, if you believe there's going to be significant turmoil in the world where you may actually need to use silver or gold as a currency in order to purchase goods, because let's say the monetary system was to malfunction, then in those kind of times when there's no liquidity in the system, silver and gold does quite well, but it only does well if you have it in your possession and it's somewhere where you could actually get it. You're not, if you have to go across the world in a time of crisis, good luck. So you definitely would want to have it stored. You probably don't want it stored in your house, because if there was somebody could break into your house. And houses aren't that safe. And even if you have a safe, people know where to get it. But if you don't feel that we're going into a situation where there's that much danger in the world, but you just feel that there are significant gains that you can make, and just without having a loss of purchasing power by holding on to fiat currencies, then it makes sense to have it maybe hide it under the ground somewhere. But that doesn't even work anymore, because now you got these satellites that could see through the ground, and basically if there was, if prices go high enough, people will find what you're hiding. So I think at the end of the day, you probably want to keep it in a vault, and then it's a tough call. If things got really ugly, I'm not sure exactly what you would do, because maybe 30 or 50 years ago, before technology could spot gold under the ground and then somebody else could get it before you take possession, it would pretty much, you just put it in a bank vault and it's safe. But back then we weren't in a situation where the monetary system was going negative with the rates everywhere, where there is a risk of the whole system derailing. And if that happens, then there's going to be quite a social upheaval where if you have your money in a bank and the bank actually fails, fortunately we're in Canada, so banks don't really fail here. They get supported no matter what. So in that sense, even in that sense, it could be difficult to get to the bank, because everybody would be rushing to the bank at the same time if the currency system was to crumble. So you probably want to have some of it in your physical possession and keep it in a safe somewhere, where that nobody knows about. But right now, I don't believe we're there. But this is not it feels like Y2K in terms of how people are, going crazy, buying things and doing things they normally wouldn't do. But there are real things now. Y2K was just a number, right? This is people dying, and also people not being able to work at a time when there's a transformation of technology, where most of the people don't have the skills in order to transform to the workforce economy at home. So in that situation, there could be significant unemployment for a period, but it doesn't necessarily have to translate into an epic disaster. But that will be for later. So.
Okay, well, Ephraim, you know what's interesting is you and I spoke this week as well, and I consider you one of my mentors in terms of investment, specifically hard assets. Which, by the way, anyone watching today and listening, hardassetalliance.com is one suggested website where you could create an account and start investing in gold and silver. We don't have any affiliation to this website. But if you'd like to send us a gift and thank us for referring you, we'll welcome any gift. I'm kidding, by the way. So, Ephraim, in terms of stocks, let's talk about silver stocks. What is your favorite stock right now in a prediction of window of time that we could, capitalize and take advantage of one or two or three of your favorites?
Well, the thing is, right now, the silver stocks have run up significantly. So for subscribers that were already, participating with me, we were talking about buying Coeur d'Alene when it was like more than 50% below the current price. And actually, at that time, silver was around like half of where it is. And then my target at that time was $26. And we just got to it a few days ago. And immediately after getting there, it spiked down. That's usually what happens when you get to an initial target. But because we're in a secular bull market in silver, and people are just starting to, warm up to it, I do believe a lot of institutional capital and public money is going to come in. So what I would suggest, and this is, I can't give financial advice online, but I could just say that from an information point of view, probably to get into the market in one third, and one third, especially when you've already launched 100% gain in a lot of these stocks. So for example, right now, Coeur d'Alene, the earnings came out yesterday, for example, and it's one of the names that I like quite a bit in the space for a number of reasons.
You got cut off there. Could you please repeat the one of the names that you just mentioned that you loved?
Yes, it's Coeur d'Alene. So that's what it used to be called. It's called Coeur Mining now, but basically what I like about them is their earnings just came out. I was expecting, I didn't really care so much about what their earnings were going to be, just because earnings are backward looking. And since last earnings seasons, most of the gain in silver took place at the end of the period. Also, there was a significant number of companies in the silver space that had to curtail production because of the COVID situation. But that has actually ended in the later part of this cycle. So it's not reflected in the prior earnings. So markets like looking forward, 3, 6, 9 months, and management in a lot of these companies are very, very positive. And that's one big thing you want to be looking at. Earnings aren't as important as the management discussion of what they think, because management knows more about what's going on with the company than anybody on earth, unless they're liars. And I don't believe these people are liars, because they have a pretty good record. So they're upbeat that production is going to be increasing, and that they have a lot more cash. Their balance sheets are a lot stronger. And with the price of silver going up, their margins will significantly improve. And going back to your question before, I believe silver equities will provide the greatest opportunity for showing a gain as silver rises. It's just a matter of picking the right ones. I believe Coeur is the right one. It's one of the top ones. I mean, on any given day, it could be not the top one, and then a different one takes the place. But if you look at it over a 1 to 3 month period, and then longer term, I believe that's a very interesting play. So I would buy it on pullbacks. We're having one of those pullbacks today. I mean, whether it lasts, I mean, here's one thing. Equity, every time you have an equity, regardless of whether it's a commodity or silver and gold, it's still an equity and it's not the physical metal. So there still is some correlation to the overall equity market. So because all these high-flying technology companies, well deserving of a high price, but they have flew up pretty sharply and they usually come down before the next leg up, it would make sense that they take a rest for, a week and a half to maybe 2.5 weeks before they launch another attack to the upside. There'll certainly be individual names that will go significantly higher in the equity market. But as a whole, I think we're just building a consolidation for another level. But I'm not interested in trading it, because when I look at silver relative to all the different equity markets around the world, silver shows that it's going to do well and the rest are going to underperform. So why would I want to invest in something that's going to underperform? I mean, I get it. Some institutional investors have mandates where they can't invest all their money in a best performing thing. So they have to spread it out into the next best ideas. So there are a number of other areas that I do like outside of silver that would be very interesting as the year unfolds as well.
So core mining is your favorite. And how do you spell that, Ephraim?
One of my favorites. I can't mention all of them because it would be unfair to the subscribers.
No, that's fine. And how do you spell, just to make sure if you could spell that for our subscribers?
Sure. So,
and while you do that, I'll ask you, I'll let our subscribers know that Efrem is offering a 10% discount. We're going to provide you with the link at the end of the show. It's usually, you're saving 10%. So it's $4.79 a month to receive unbelievable information from Efrem. Efrem is a super honest guy, super humble. Like I said, he used to predict and chase hurricanes, and using that similar, or math, forgive me if I'm explaining it wrong, we might want to expand how you got into this.
Yeah, no, I mean, everything was good there. It actually,
thank you.
Yes, what I was hunting down were actually tornadoes. In my thesis in computer engineering, I was actually patented this artificial intelligence system, a new form of AI, but that was basically 20 years ago, before AI became a buzzword, and it basically crunched three-dimensional radar imagery of vortex patterns of precipitation up in the atmosphere, and it was able to identify signatures of tornadoes, and some of them killer tornadoes, before they formed, and that became the subject of some pilot test studies as well with the Severe Storm Center. So the reason why I mention that is because there are tremendous parallels between what allows me to provide clarity and insight into where the movement of people and capital are going to be going in the financial markets. And the parallels lie in the fact that markets are complex systems made up of individual groups of people doing different things. And as time moves on, their interactions get more complex. And it's the same thing as a tornado starts forming. You have these precipitation particles, cloud droplets, that start off in a relatively orderly way, and then as they start building up, they become more complex and they start showing tendencies and rotational structure that lends itself to predictability. So it's very interesting how something that gets more complex over time becomes more predictable. It's exactly the opposite of what current methods that people are using today. Today, people are using methods like statistics or standard AI, where they're trying to find patterns in the past and then extrapolate them forward. or they're using new data sets that have very limited history, but it doesn't allow them, give them enough history to identify outlier events, the kind of events that could kill you or destroy your portfolios. Whereas this technology, basically what it tries to do is calibrate forward how the markets and people will self-organize. And it's kind of based on this physics of crowds and how crowds evolve over time and result in contagion that could lead either to breakaway movements into panics or movements into manias. And I'm really just trying to look at situations, only situations, when the systems people are currently using today will fail because they are trying to identify the 95% of the average events, where I'm only trying to look at the 5% or even like the 1% of 1% of events that are going to be so unusual that if you focus on that corner of the market where that unusual behavior is taking place at the exact time when everybody else is taking the opposite side of the trade, there is tremendous liquidity to build extremely large positions without having significant friction and cost in the market. So it not only does it allow opportunity, but it allows you to get into the market without having to worry about the cost or the size of your portfolio.
Wow, I love it. Brilliant, Ephraim. That was quite the explanation. And now you see why Ephraim is one of my favorites when it comes to investing. I mean, the explanation is phenomenal, and I hope everyone understood it. Ephraim, I think I found it. So it's cœur, like heart in French, cœur mining,
Yes.
and CDE. There you go. No coincidences. Heart, core hustle, cœur mining. It's all about the heart. I'll be investing in a few of these after the show. Super excited. So thank you for that info. Let's talk a little bit about Bitcoin. Let's say that, you know, there is a digital currency for every country. Could Bitcoin potentially become illegal, that they abolish it and then we're left with all these coins?
Yes, it's possible. It is. They could do any, there's people, you know, governments could do whatever they want to do. So that's why I believe the safest way to invest in digital currencies is not to invest in digital currencies. Because when people say, I know it sounds weird, but when people say investing in crypto assets, everyone thinks Bitcoin right away. Because Bitcoin was the first asset and it was the gateway. It's no longer the gateway. It is a gateway. Because earlier on in the beginning, when the systems weren't fully developed, a lot of the players didn't allow you to get into other coins directly. Now they offer all kinds of other coins that you could use as a gateway to getting involved into cryptocurrencies. There are institutions now that are actually, you know, you could just give them fiat currency and you could go straight to any coin you want. Pretty much, because they have it doesn't actually go straight to any coin. They have in-house systems built where they just kind of disguise the process, but it's not transparent to the person that's using it. So the user interface is very, very friendly, when a number of years ago it was unfriendly. And I think that's one of the reasons why you're going to see a significant advance in a number of the alternative coins that aren't necessarily tied to currency, but coins that are tied to real things in the economy, things that people need, problems that people need solved. And I believe that there's some significant problems. Like I'll give you an example. One of the big problems in cryptocurrencies was the privacy. Privacy was a big issue, and the other issue was also the ability to have a tremendous amount of liquidity. And there wasn't a lot of liquidity for a lot of the big institutions to get involved in some of these coins. Now that there are protocols in place and actual cryptocurrency coins that are on the Ethereum platform, and most of them are on the Ethereum platform, which tells me that people should be investing in Ethereum. like I in Ethereum is actually doing quite well of late. But as well as Ethereum is doing right now, I do believe that a lot of individual coins in the decentralized finance space, a lot of the times you'll hear it on the internet as DeFi, and it just means decentralized finance. And that basically means that you don't have some central party controlling the transactions, but you're able to actually do transactions directly with the individuals that you're trying to do commerce with. So, for example, outside of, let's say, providing liquidity in financial markets, like whether it's in lending or providing some kind of interest rate that's far above what you could get at a bank these days. Like some of these coins are paying interest rates of, over 6%. Some are much higher than that. And it's quite enticing because, usually in equities, when something pays more than, 6 or 10%, you usually run away from it because they probably need the money so badly because something terrible has happened to their company. But with these coins, there's a number of coins that are actually doing exceptionally well and have a bright future where, they have risen a lot right now, so I'm not going to be recommending any individual ones. I could just tell you, focus on the DeFi space. And also focus on coins that are tied to privacy, because privacy is a huge issue. And there's some underlying technology that you could tell if a coin is good or bad. There's this company out of Israel, and they basically came up with this algorithm called, it's zero knowledge. They have this thing called zero knowledge proofs, and it's called ZK Snarks and ZK Starks. And basically, the one with the Starks is actually more advanced. So if you see any coins that are related to, that are privacy coins, that are using those protocols in an innovative way, then that's a check mark. If they're not using it in the most innovative way, I would just run away from them. And you will notice that if you look at the charts and the way they've been performing relative to Ethereum, you'll see the ones that do have those protocols are doing better. So an example of one that I got involved in following the Bitcoin halving, and even prior to that, was Komodo, KMD, and also ZRX, which is the AUX protocol, which is in the decentralized finance space for providing liquidity to financial providers. Those have tremendous utility. But another area that's extremely interesting is kind of coins that are like the Netflix of crypto, and there are some coins out there. I don't know if they've got to that level yet, but they're trying to get there. So basically, Engine is one of them, but I'm not recommending that one yet. NKN looks very interesting. That one has to do with removing bottlenecks in the web. So when people are communicating on the internet is a very centralized place right now. And one of the big issues of late that have come up is the idea of net neutrality. Like, people want the internet to be neutral. It should be a resource for everyone to have access to and gain information. Unfortunately, you have companies and even worse, governments getting in the way of making it a free enterprise. And with the advent of these new coins that offer decentralized internet communications and that utilize the resources of computer systems that may not be used by people while they're sleeping, or maybe they're just not busy. And those resources could be used by those coins that are providing a utility for other people to gain access. And because of that, why would somebody want to give somebody's computer resources to a coin? Well, you get paid something for it. So you actually get a stake in the coin by providing that. So it becomes a kind of a bilateral kind of interaction. It's not like a person just buying a coin, but the coin is actually requesting your service at the same time. So it's almost like, somebody asking for a donation. Could you please donate some computer time so that I could actually provide somebody that doesn't have access because they're in a part of the world that doesn't really have the computing power in order to process the information.
Wow.
So those are some of the coins.
Amazing, amazing. I hope everyone's taking notes. And if you want to find out more about Efrem Hoffman, you could check out his LinkedIn profile. You could see how to spell his name there, Efrem, Efrem Hoffman. And you could also take advantage of the 10% coupon link that we will be showcasing at the end of the show. So Efrem, tell us, I feel that my conscience is telling me to just let you free flow rather than me asking a specific question. What do you feel we should know right now, what in terms of the market, and where the advantages lay and what we should take advantage of?
Well, there's a lot of things that concern me about where things are going in the market, but that also opens up huge opportunity. So I think I'd like to focus on the opportunity, because when people watch the news every day. They could just go on whatever channel they want and they could hear bad things. We're not going to do that, because they may not have access to certain information to find those opportunities. Since I spent a great deal of time over the past years, and especially over the past 3 to 6 months, really trying to hone in where the next leg up is going to be. And it's not just going to be in silver.
And isn't it a great time? I love your positive energy. It's a great opportunity right now. So please continue on that. Share with us where the opportunities lay.
Yep. So I believe right now, regardless, hey, I'm going to backtrack this. I want to mention one investor that I think is probably the most important investor of all time. And I don't believe it's Warren Buffett. Not because he's not a great investor. I just think that for the average person to make money in the market, the number one thing they should do is be like Sir John Templeton. And basically, the number one thing he did was, the first question he would ask is, not where is the money going? Where's the hot money going? That doesn't matter. Like, what matters is, what does the world need? And what problems need to be solved to live in a world that we find ourselves in? And once you could identify that, then you look at, where is the capital spending taking place in the real economy, not in the financialized economy. So this is one of the things that really bother me, is that all these bubbles that have exploded and are becoming more frequent over the past decade and 2 decades, since like 2000, it's all because of financialization. It's because there's almost more things that are derivatives of the real economy than there are things that people actually produce. Nobody produces anything anymore. So you have all these people talking about providing these services, but those services are just a service to another service. And then at the end of the day, even if you want to buy the thing, you can't. And I mean, just look what happened back during the crisis in the beginning of COVID. People wanted to buy certain things, and even if you wanted to buy it, you couldn't get it. I mean, people wanted to buy gold. You have to wait like 2 months to get gold, and if you want it that bad, I mean, gold probably would have been 5,000 already. I guess nobody wanted it that bad, probably because nobody had any money to pay for it. But that wasn't the reason. The reason why they didn't buy it, why it didn't go up, was because so many other asset classes, once like this COVID thing happened, were selling off so badly that there was a tremendous liquidity freeze. So the only asset in the world, or assets in the world, that had any value was silver and gold. So they used silver and gold as collateral for all those other things they couldn't sell. So, because if they didn't, those other things probably would have gone to absolutely zero. So yes, it's true, gold silver and all, silver stocks fell 50% in a very short period of time. But I don't see, like, that's just a mechanical thing. as an investor, even like a short-term investor, you only had to wait a month or two to see it double from that level. So you shouldn't be worrying about those things, because those things you can't control. You should be more concerned about where is the capital spending going. And right now, it's going into 5G technology. It's going into autonomous vehicles. It's going into solving medical crises around the world. So it's going into healthcare, because healthcare systems are broken. Not just like finding cures to diseases, but also the ability to have different hospitals communicate with other hospitals, because the world is a completely interconnected place. And now that we have telemedicine, people are being checked out by doctors in different parts of the world. And the reality is that if you don't have a proper medical system that is decentralized, I believe that will be the next big area in the Ethereum platform. There will be coins that will be decentralizing hospital records, so that if you go to get into trouble in a small town, but yet the records are somewhere else in the world, they'll be immediately accessible, no matter whether you have a good access to the internet or not. So I think these are big areas where we're moving towards, and it takes and the difference between today and the past is it takes an incredible amount of not just money. Like, it used to take a lot of money to do things. It still does take a lot of money, but what matters more is having people willing to communicate and work as an ecosystem. So, and that's part of the reason today why you have companies like Amazon, Microsoft, and Apple, that why are those the only few companies, and Google thrown in, that are like $1 trillion and going into $2 trillion enterprises? It's because it's hard for anyone to entrench into that ecosystem without being part of it. And they get the benefit of that ecosystem, and so do the people entering it. So I believe that's very different than a long time ago, where people were, trying to compete to win, and they were treating enterprise as a finite game. There's two types of games you could play in the market. There's finite games, and then there's infinite games. Infinite games never end. And when you're in the financial markets trying to make money, you want to be playing an infinite game. That basically is like, I'll give you an example. It would be like, let's say the NBA, okay? So the NBA would be an infinite game. They have one season, and then there's another season. It never ends, and they're always in the game of making money from season to season. But the playoffs would be a finite game. You know when the game is over. The game of investing is never over. So, which is the other major point that people should take home, is that there's always another trade. There's always another investment. So when I mentioned earlier that silver and gold stocks and Bitcoin, all these things have already run up and people want to get involved in it, it's never too late to get involved, but you can't just jump in at any level. You have to understand the dynamics of how people operate, so that when the price does come down, you aren't in fear, thinking that you have to make a rash decision, but you're actually prepared in advance, hoping that it goes down and hoping that it goes up. So you want to be in a position of power where your position isn't too high in the beginning, so that when you're in, you're hoping it goes down so you could get the other 2/3. And if it goes up, great, because then you're making money. And then eventually it'll come down. It doesn't have to come down to the same level, as long as it's kind of moving in an orderly way and there's liquidity in the system. And the fundamental reason for it moving up is tied to capital spending. Now, for silver and gold, there is capital spending going on. There's silver mining companies that know that there's a need for silver in the world that we're living in today, in a tech-driven world, and a world where monetary systems have gone awry. And because of that, they are going to be increasing production. They're going to be putting more investment into equipment. So you're going to want to look at equipment companies that are servicing the miners. They're going to be making money as well. You want to even go further than that. Well, how do you even make the equipment? So then you're going to want to look at, steel companies that provide the steel to make the equipment. the electric motor companies that provide, and then it goes on and on and on. And then it all ends up in the same spot, electric vehicles, because that's where we're kind of moving towards. So, yeah. So at the end of the day, capital spending is number one. And then keeping your emotions in check is number two. And number three is, having a good mentor that could, guide you along the way, so that if you're unclear, they could tell you if the market's biased to go up or down. And that's something I do all the time with my clients.
Excellent. And you're a great mentor, Ephraim. So at the end of the show, we will be flashing this coupon code where you could actually join for $4.79 a month. Let's talk a little bit about the offer, Ephraim, if you can expand on that, what our subscribers would be receiving.
Okay. Well, I'm first going to tell you what you're not going to get. You're not going to get some little tear sheet that says buy these stocks and then and that's it. And then a month later, you get another sheet and it has the same stocks, but maybe adds one. And then you're wondering, what am I paying that kind of money for? I'll just get one sheet and you'll probably just lose money with that kind of mentality, because you might as well just go onto the internet and look up what are the, the main stocks. But the main thing is timing. But everyone says you can't time the market. I mean, you don't need to time the market. What this technology does is it kind of looks at things differently. People are looking at patterns and prices. Mm-hmm. Even people that are fundamental analysts that are looking at the balance sheet and how earnings are doing and how they're investing their money, they're still plotting charts of how earnings are doing. It's still a chart. It may not be a price chart, but it's a chart. And they're looking for patterns and they're connecting the dots. And all the dots they're connecting are extrapolations of the past. And if you're investing in some of these new categories like Bitcoin that have hardly any past because they're such new asset classes, they don't really have the power to decipher outlier events. But it's the outlier events that make you the most money. And it's also the outlier events that destroy you. So you need a technology that could actually see forward, calibrate how people see and perceive change in the market based on their current technology, but then overlaying what they will see in the future before they arrive there. So what I do is I map out what I think people are going to be seeing, and it's actually with 99% accuracy. So that I could testify. So 99% accuracy in terms of calibrating forward what they're going to see. Now, calibrating forward what they're going to see is not the same thing as being 99% right on every investment. Those are two different things, but it's a big deal. And I'll tell you why it's a big deal to be able to even calibrate forward. Because if you could calibrate forward and see what different groups of people are going to be doing, imagine it like a roadway that's going out in different directions. And all of these paths intersect at some point in the future where everyone is going to be either showing up or leaving the party. It gives you insight when those big critical turns are going to take place. And those are the only times you're going to make the most money with a fairly, tight stop or not just a tight stop, but an ability to enter the market with high liquidity and feeling good about it. And then when you actually see it move against what these other models are looking at, it actually, gives a feeling of liberation to the investor that, hey, it is possible to actually see the market depart from what most people think. Now, the other reason why it's really, really important to do something like that is that when you're investing in the market, as I said earlier, you want to be diversified. So imagine now you're looking at the market. Let's say you're looking at all of the different asset classes in the market or all the different sectors. So there's about 11 sectors in the S&P. So imagine you looked at each of the 11 sectors through this new lens. And now each one of them show a whole bunch of these roads intersecting at a point. If all those roads of all the different asset classes are all pointing in the same path, that would be a terrible way of investing, because it means they're completely correlated investments. They're all going to the same place at the same time. So even though you may make good money at the end of the road, the volatility on the way there is going to be tremendous, because every time one asset does a turn down or a pullback, it will be magnified by every other asset pulling down at the same time. So by being able to calibrate forward these intersecting paths and identifying when different asset classes will be landing on different points in the terrain, that tells you that people will be zigging when others will be zagging, and that will offset and cancel out the volatility, and you will get to the same destination just as quickly, but with less risk.
Wow, amazing. Do you ever look in the mirror, Ephraim, and say, wow, I'm really smart?
I don't do that, but I can tell you one thing. In university, this is interesting that you asked that question. When I was working on my thesis, and I was doing some crazy stuff, and it felt pretty good doing it. And then I'd walk into the mall, okay? And then I would just pass people, and I don't know, for some reason I was just thinking, who else is doing something that is really, really interesting, but they just aren't saying anything about it. So I always assume that there's somebody else doing something just as interesting, so I don't have to think like that, because that's when you get into trouble.
That's right. And that's one of the many things I like about you, Ephraim. You're super humble, because, many people we meet in our travels, and it's simply an observation, not a judgment, they can be pretty arrogant. And, you and I had coffee for a few hours, and what I really liked about, you're a really likable guy. You're super nice. You're super patient in explaining everything. And you're truly humble. And I believe you have a stroke of genius when it comes to science and investments and just the way you explain everything. So I really appreciate it. And for our subscribers, please check out Ephraim's LinkedIn, linkedin.com, and check out Ephraim Hoffman. Also, trust me, you're going to spend the money anyway. So take the $479, invest in this beautiful offer where you're saving 10%. So it equates to $479. And you'll get unbelievable information from Ephraim. Ephraim, does a subscriber also receive one-on-one with you?
Well, I do offer that service, but essentially they get to interact through the Slack platform, so they could ask me any question they want, and I get back to the subscribers. So
okay.
It will be like they get to see what's in my mind. So as I'm watching the world markets on a daily basis and I see something that's interesting, I put it out there. And then if they have an idea maybe that I didn't put out, but they want me to take a look at it, then I'm open to doing that too. Excellent.
Sounds good. Well, this has been incredible. We'll have you back on the show in September. But for now, thank you, Ephraim. Wonderful information. I really appreciate your time. And is there anything else you'd like to add before we conclude?
I think we covered quite a bit on the show. I really thank you for your time, and it was great being on the show. Look forward to the next.
Thank you. It's great having you on the show. So thank you, everyone. This concludes our episode with Efrem Hoffman on the Heart Core Hustle.